Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed and tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their representative officers, personnel, representatives, agents, or independent contractors, or in such capacities, licensed financial advisors, registered investment advisors, registered broker dealers. Nothing in the webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options. We are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing the webinar, you agree to hold the above harmless from any losses you may incur as a result of the information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. There you go. All right, good. Now we can start. I got to get that robot back. That is no way to start a thing. Just lag from chat to chat. I don't know what that means. Anyway, and you guys can't see this chat screen, correct? I mean, when the question screen, nobody can see it but me, as far as I understand. So I always reread the questions. All right, so what is going on? It's an up and downy kind of day. Things are all over the place. Not particularly, well, it's a good day if you want to scalp some cash. Like this morning, I got my my Nasdaqs, and I was short from the evening, so I carried through. I shorted up at the 74.80 line, and I carried that through, and we got the nice dip this morning, and I cashed out, and then I went. I actually went long. I'm not sure. I guess I must have had 12 short here and cashed out, and then when it came down to this line, I went long with 4, and then when it went up, obviously I cashed those out too. There's 7,500. You got to imagine. Aside from that, there's a great big red line there. It's also 7,500. So you have to figure you're going to get rejected at that line at least once. But it's too hard to call. It's not going to be a good day for trading futures, I don't think. Which is odd, because it should be better than these insane days when Trump is saying crap and so on and so forth. He's on vacation. Everybody's ignoring him right now. It makes things a little more steady, but the market's not being steady. The market's gyrating up and down crazy. So it makes it very rough to call. I would kind of like to short the Russell over here if it gets back to 1690. But on the other hand, if everything keeps going up, the Dow is certainly lagging to the upside, so it might make a fun long. Very hard to call. So, and again, when you have cross things like that, you're like, well, maybe this, maybe that. The best thing to do is don't play. Do not play. Now, speaking of playing, though, HMNY, somebody said the CEO was going to say something. Well, it's at 7 cents. You better say something amazing, because at the moment it doesn't look very good. And the other fun one to watch right now is Tesla, TSLA. And they're just sort of drifting around at 371. And look out there in the trading. There's only 3. This is the actual stock. There's only 3 bids down there and 6 asks over there. This is really thinned out. It's interesting, isn't it? Because that's imagine how many shares have to be traded in the stock, and that's all you can see for bids and asks. There's more action in the futures than there is in Tesla. There's more action on Harmony. Not Harmony. Helios, I always call them Harmony because of the letters. On Helios Matheson. There's more action on that. 557 people trying to find a buyer. Will anyone pay 7? And I don't know what it is. Somebody just said in PSW chat that he was going to say something to the CEO, but I don't know what it was. And let's see. All right, so beep, beep, beep. We'll make that smaller, and Did I make my screen too big? Is it like oversized for you guys? I don't know. It's very big to me anyway. It seems we can certainly do with a smaller screen size. Yeah, let me try because I feel like I'm playing on a children. I feel like I'm in the land of the giants or something here. So if I make that small, and then I go like this, and I go like that, and I go like display settings. And what do I want to do? 1280, 1440 by 900. That should work. Key changes. All right. Let me know if that's bad, but I think that's probably good. I think I made it too small or too big, whatever you call it. Now I got to find the screen though. Oh, there it is. That was easy. Still looks weird, huh? Oh well. Anyway, so oh no, don't want start charts. Want that one. What is that? Oh no, you did not have Darth Vader marry you. That's so geeky. Holy cow. Oh. You know, I don't tell my kids what to do, but I think I might have to say something about that one. I really let them make their own mistakes, but that's a little weird. Anyhow, I mean, and I'm a Star Wars fan too. I just think that's just, I don't want to look back at those pictures in 40 years. Where are we? So the NASDAQ is going to hit the spot I started shorting at again, but as I kept saying, it's like I don't mind losing $20, $20, $20, $20. These little, not that I lost it, but I mean, you get these little spikes. Maybe I'm going to lose $20 or something like that. But then you get the one nice one, and you make $500 or $400, whatever it was, and that's great. So I don't. That's all I'm looking for, though. It's like now, it can do this. So it's a little harder. I didn't know it could do this when I was betting over here. I would have been a little more nervous, but I mean, I would have been more nervous when I went to bed last night. I went to bed here, and I'm like, okay, I really don't see why the NASDAQ would spike up. So of course, what does it do? It goes down. I make my money. I'm done. But then right after that, I'm like, holy cow, am I glad I got out. Well, actually, that's not true. I went long here, so it went up, and I was like thrilled though. It went back up. I thought it would go back up to here. It went all the way back up there. The Dow's just fading out. So that's I think Disney's having a bad day, right, guys? Is that correct? Let's see. What happened in the chat box? Well, there it is. Nobody has any questions, so I'll just babble on until somebody does. Disney, that's right. Look at that. Now we have Disney, but I thought they were overbought, and they were overbought. So there you go. This isn't Yahoo. What is this? Finance. Yahoo, that's the one. It's a different kind of Yahoo. I think. Disney. What are you? What are you? About blank. Okay. It doesn't seem very useful. Maybe it's my computer that's being slow. I don't know what the hell is going on here. It's weird. I guess the webinar is actually dragging it down on my side somehow because I think that we just maybe overloading the system at the hotel. Not sure. That's crazy if I can't access Yahoo. Ugh, annoying. Internet, are you working? You say you're working. Nobody's talking questions. Am I on? Am I still on? That's a good question. What on earth? Finance.yahoo.com cannot be reached. All right, forget that. All right, stop. You're embarrassing yourself. All right. Okay, how about Google Finance? Oh, that's acting like it's working. Well, Google's happy to work. I never use Google Finance. How's that go? What are we going to look up? Oh, no, see, how DJI did not match. Dow Jones, how about that? Oh, okay, DJI. Fine, Google, be that way. Now, can you show me components like Yahoo does? No, you cannot. What good are you? Let's try Yahoo again. Maybe it'll behave itself. Ah, see? Now that I threaten to go to Google, you're going to work, right? Say, no, don't leave me for Google. Components. You guys think I'm talking because I'm talking to you. I talk like this all the time when I'm home. It's the same thing I do when I'm by myself. Let me see. Nah, only sometimes. Disney, there you go. It's down $2, so that's not a big deal. But it's down to 114, and I think that's pretty much right where we wanted them to be. No, maybe not. All right, butterfly portfolio. That's right. In the butterfly portfolio, we have Disney, and those should be gone. I forgot what we covered with. I didn't do the adjustments yet because I'm on vacation. Anyway, we have the 92.50 110 spread, and the last time we made an adjustment was, I really have to update those. I'm sorry about that. Let's see. Okay, the 10 short July 110s can be rolled to the 5 short September 110 calls. So it's 110. Wait, what are you doing? Which one is the butterfly? That's the short-term portfolio. That's DXD. That has nothing to do with it. Are you the butterfly portfolio? No. That looks like the long-term portfolio. So let's see, in the long-term portfolio, we had this position, which is similar to the butterfly. We had the 91.15 spread. The 95 puts when we shorted the 110 calls. And we said, well, we're going to take the, that's not what I said. I said we're going to take the 110 calls and we rolled those to the September 110 calls, which were basically, I see, we picked up more cash by going to the September 110. So our target is basically, less than 115. That's what our target is into September on that. Now, that's not the butterfly, though. That's not anything to do with it. That's something. This looks like the butterfly. Okay, so here's the butterfly portfolio. And I said, we're only 1/3 covered with the short July 135s, and at the time they were 28, whatever, 25. Our long spread is in the money, so there's no reason not to roll 7. Roll 2-7, I see. Half cover, September 110s for 33.60. So it's the same concept. We picked up a little bit of extra money, and we rolled the 7 short September 110s. So that's where we're at with Disney. Is we're just looking for something under 115, and we're going to be happy. And of course, we're going to roll again, so it's not a big deal. But that's how the butterfly portfolio works. We were discussing that in chat earlier on one of our new trades. The idea is we just keep moving the targets. In other words, we sell the 110 puts and calls. Now, obviously, it was over 110 when we expired. So we collected the money on the puts, fully paid. The short calls we rolled to a higher strike. Well, not a high. I don't know what the strike was originally. It was, we sold the 105 calls. And so what we did is we take the 105 calls that we sold, and they expired around here, probably $5 in the money. And we rolled them to the 110 call. So we wrote them up $5. And that's what we do. And we actually, it wasn't even an even roll. We actually collected a little bit more money. Now, the next time we roll, maybe we'll roll to the 115s. The next time we roll to the 120s. The next time we roll to the 130s. We only have to be right once. We have many, many times we get to roll higher. We only have to hit the target once, and all the rolling and all that money we collect expires worthless. And then we collect it, and then we start a new cycle with new targets. But meanwhile, well, the put money keeps winning, obviously, if we're losing on the call money. And meanwhile, of course, anything to the upside, our long spread is going in the money. And the long spread, in this case, is 92.50, 110. So it's a 12.50, a 17.50 spread that we paid net. Call it call it $9 for it. And it wasn't 9 because we sold the puts, but it was actually 9 minus 160 is 740. So we paid let's say we paid $750 for the 17.50 spread. We have $10 upside at 110, and so we're basically in the money. And any money that we do happen to make selling the short calls or short puts is just bonus money. But we're up 15 times 10 is $15,000 on the spread. And that's what it's all about. So and of course, a lot of the put selling, which is only half cover at 7, the call selling, a lot of the call selling, it's really just protecting our gains at this point. We're protecting the $15,000 worth of gains we're going to collect when this thing expires in the money. So we're selling, we're collecting the premium, we're making a profit short term, and we're protecting a $7,000 loss to our long-term position. It's all good stuff. That's what the butterfly portfolio is about. Very, very boring, very casual. We only make adjustments really on expiration time. We only have 1, 2, 3, 4 positions because these are parts of the other two. Oh, there's the puts. We did sell the puts. Yeah. I don't know why those are. Oh, yeah, I see why they are over there. So these are the Julys, and that January got put by itself. Where Mondelez, I planned in advance and did it better because we have the spreads here and the short puts and calls are there. Not that it matters either way. Meanwhile, it sounds like nickel and dime stuff, and it is. It's very boring, but it's a really boring way to knock out a 20% gain. In what month is this? August. In 8 months, we've made 20%, which is it's what the butterfly portfolio always does. It is the dullest portfolio we run. We've done this for 10 years, and in 10 years, it always makes 30%. It really hardly ever makes 20, and it never makes never makes less than 20. It always makes something around 30, hardly ever 20, and hardly ever 40. It just makes 30 and 30 and 30 year in and year out. It's a really nice way to run a portfolio. It's and you say, why don't you run all your portfolios that way? Well, why would we? Because we make more money. It's our lowest performing portfolio, but it's also so steady though that it makes it attractive. If you want to run a large amount of money in a mellow account, and we only touch it once a month, we only touch it on expiration times, and even on expiration days, sometimes it's nothing to do. If you didn't pick it, now the key to our success is we're smart about the channels. Like when something's low in the channel, we play it a little more bullish. When it's high in the channel, we play a little more bearish. We don't robotically just do it all the time, the same sales. You've got to pick your targets. You have to be cognizant of earnings and what the extra risk is coming into earnings. But of course, there's also extra premium you can collect. But if you want to go back in the reviews, and all you got to do is go back to the portfolio review section in Phil Stockworld and read back on here in the portfolio section, and it looks like this. And you'll see our portfolio reviews. Pretty much most months we have a portfolio review. I skip them once in a while. I usually use this guy because I like him. And we're always trying to get $1 million out of our portfolios. So not a top trade review, but the portfolio reviews. And you can track every single trade we've made from day one. You can see exactly the only time we ever make adjustments. Sometimes we'll add a trade to the butterfly portfolio that wouldn't be during the review, but almost all the adjustments to the butterfly portfolio come during the review periods only. So you can see pretty much everything we've done. And it's just such a mellow way to make money. It's such a good way to put, especially if you're just learning and you don't want to take too much risk. Like, where's today's post? As I was just saying to the members in the chat room, I don't know how you can see that. Let's see. Control plus. Oh, okay, maybe a little better. All right. These are the Tesla January $500 calls. And so, you would think when the stock is at 300, 320, 340, whatever it was at, we sold these calls for maybe $4 because we thought, we're like $4 for the 500 calls. They got to be kidding us. That's in the hedge fund, So I don't know how many we sold. We probably sold 100 of them or something like that, which is, $40,000. Yeah, it'd be $40,000. So I figure we collected $40,000 on the call. So that's great, but all of a sudden, and it drifts up to 6, but we're not worried. It's not going to 500. Tesla makes like 340, 350. And still the $500 calls are now $6 or $8, or here it's $8 in fact up here. And we're down $40,000. You're down $40,000. So that's normal in a position like this. It's like the fluctuation of these far out of the money options is not usually a big deal. They go up and down, but the bottom line is unless they get to 500 by January, this guy's going to lose all his money no matter what it says in between. And we also sold puts of an equal value. So it didn't matter. We sold I thought we sold the 300 puts. We sold the 200 puts. So, when Tesla was at 300, we sold the 200 puts and the $500 calls. And we said, well, they probably won't go below 200, and they probably won't go above 500. Oddly enough, though, Musk makes that tweet yesterday. The stock shoots up. And the crazy thing is, even though he said we're selling the company for 420, the 500 calls hit 1255. Now, for us, it's an $80,000 loss that we're staring at in the hedge fund while it's happening. It says minus 80,000 on the 100 contracts, which is very annoying. But the conversation Doug's a trader on the hedge fund. The conversation Doug and I had about it was basically to say, should we sell more? Because they're going to offer you $12 for the 500 calls. They have to hit 512 to break even in 3 months from now, 4 months from now. It's just stupid. So, but we didn't. We just decided to wait and see what happened. Because I said I predict 375 at the end of the day. We actually hit it almost on the head. Once it calms down, it is very quickly though. But this is why we have a saying in Phil Stock where we say always sell into the initial excitement, because it didn't last while we're having the discussion. It already calmed down where we said, I can't get 12, forget it. If we could get 12, we were actually going to sell some more. But it calmed down quickly. And not only did it calm down, but here's the weirdest thing. Tesla is significantly higher now than it was when these calls were $8. But because, and this is why I wasn't worried when it hit 12, because Musk said 420, he put a cap on it that caused the people who have 500 calls to dump their calls. And it went all the way down to 150. So in the same freaking day, I'm sorry, this is tomorrow, but in one day, it went from 1250 to 150. That is a massive, it's like a 90%, 80% profit in a day. Yeah, it's like, 80-something% profit. In a day, that's just the volatility. Obviously, we never got close to 500. It went from, the stock went from 350 to 375 or whatever it hit. But that doesn't justify this kind of move. That's just insane. But that's the insanity of the people who play Tesla. They actually believe this kind of shit's going to happen, and they pay and they suffer for it because they gave this money up. Somebody collected this cash, said thank you very much, and then right here you can see them buying the same people. See that spike? See that spike, same kind of volume? These guys are selling to any sucker who wants to pay that kind of money. And here, when it gets down to this level, they're like, okay, buy back at the normal price. I mean, you can write a computer program to do that, because what's the computer program say? The standard price for Tesla is $4. For this option is $4. The fair value for this option is $4. Therefore, if it goes above 8, we will sell them. And if it goes back, and then when it comes back to a fair price, we will buy them back. Very simple, right? And you can say it the other way too. If it goes down here, we'll buy them. If it comes back, we'll sell them. All it is a standard variation. You're looking at standard deviation in the price, and at that standard deviation lines, you're buying and selling. In fact, you can see them right here. Those are your lines, 9, and the buyback started right about this line, 230, 250. So it's very interesting, because I mean, you could write that computer program, but we were able to predict it using the 5% rule. That's how I said 375. I'm like, well, it's going to settle at 375. All right, questions? Oh, wait, let me fix this. Control minus. Okay, I think that's right. Please, Phil, if you're setting up your computer game, we'd love to see your settings for charts you have. My settings and charts are not very complicated. It's just a standard thinkorswim chart. There's nothing unstandard here. This is a standard thinkorswim 5-minute, 5-day chart. That's the ones I use in the futures. And then I add one study, which is studies, add a study, trend study. I can't see it because of the chat box. Wait. Now I lost it. All right. Wait a minute. That's not right. Oh, here. You have to click on the chart, right click on the chart. You go to studies, add a study. It's a trend study called pivot points. See pivot points over there? That's it. And then you just click on that and it adds these lines. Nothing about it. I don't change it. There's a lot of things you can do and variables and blah, blah, blah. I just like these, and the reason I like them is because it just shows you where the general support and resistance are going to be. This is for all the TA people, whether they know it or not. These are the lines that they're going to be using today. It's like these are the lines that the charts end up drawing. The 2-day moving average, they're very short term, the 10-hour moving average or whatever the hell they're using. This is where they're likely to go based on standard deviations. And that's what the pivot point study does. And you can adjust them, but it doesn't make sense to customize a study if you're going to use it to see what people are doing, because the people are going to be using the standards for the most part, or at least their average variation will bring them back to the standards. So, I like that because it gives you an idea of where a good resistance line is. It's not the lines I use. I calculate out the 5% lines, but whenever they agree with the standards, or when the standard line is 400, basically, I know that's going to be some serious resistance. Or when it's down here, we know that's going to be a bit of support. And they're fairly reliable, and they're reliable because most people do trade TA. Now, Helios is still 6.5 cents. I've got 20,000 shares. And it's $8,000 down. I mean, my average price is 50 cents. I should buy another 20,000. If I buy another 20,000, it's going to cost me $1,200, right? So I'll be down. So I won't be down 10,000. I'll still be down the same 88. But my average cost will be about a quarter, 30 cents, I guess. Which is possible to get back to 30 cents. It's not likely to get back to 50 cents. So we'll see. But I would like to have some more information, so I'd like to know what the guys are saying. And obviously it wasn't good because it's going down. Let's see, maybe whoever said that in chat would know what it was. Let's see if there's any information in the Phil Stockwell chat room. Nope, nobody said anything. All right. Well, if you're online, whoever said that, if you're online, tell us here if anything happens. All right. So what else? Three says, my take on Newell, which is Rubbermaid. If there's an opportunity for us when it bottoms out, I would like them if they bottom out. I like staple things like that. It's like I like Harley Davidson. I like Rubbermaid. I like brand names that are like embedded in America because that's what people are going to tend to buy. I know there's a lot of people came out with other kinds of containers, right? And there's all sorts of things, and there's even Glad has even came out with containers, but it just Rubbermaid is Rubbermaid. People just buy and use those kind of things. They have other stuff too, but I always think of the containers. NWL. Let's see if I don't even know what else they have. I don't really pay attention to them much, but they're a good, solid company. Look at that, 5 times, not even 5 times earnings. I mean, this is crazy. People are nuts. What did they do that was so horrible? Class action lawsuit. What? You terrible people. What did you do? Let's see, Klein Law Firm, Braunstein Law Firm, another law firm. You guys are busy. Rosen Law Firm. Wow. See, that's the problem with being a great big company. Well, that's bad. Tariff impact can reach $100 million. That's not good. But when you read this stuff, guys, the first thing you have to do is say, well, how much money is $100 million to these guys? It's a $10 billion company. They've got $14.7 billion in sales. They have 2 point, what? No. Okay, see. All right, hang on. So maybe they don't have 5 1/5, or maybe their earnings aren't as good as we think. That's funny. All right. Whatever the reason they have I don't care why they have a $1.3 billion tax credit. I just know they're not going to get it again. So I care about their operating income. Their operating income was $1.4 billion. Still very nice. Figure normally they would make 500 on 8, so 14 is 6 more, is 2/3 more. I'm sorry, 3/4 more. So 3/4 of 5 is 375. So 8, maybe 9. So maybe $1 billion, maybe 900 million to $1 billion would be their proper income. So now the question goes, how much is this company actually valued at? And I know I just said it, but I forgot already. $10 billion. So their PE is not 5. Their PE is more like 10 to 11. And now let's take a look at what the analysts say. So if I'm right, that means they're going to be making about $2 a share. So let's see what the analysts say. There you go, $2 a share. Okay, good. So I feel good about that. So now, what does it mean? Again, keep that in mind, because when you see these PEs, especially this year after this tax bullshit, a lot of the PEs are not worth the paper they're written on, because they don't care the fact that the company just had a massive tax break or a rebate, or some of them on the other end, they had a massive tax payment because they repatriated their money. I don't think that's the case with Newell. I don't know why they have a huge credit. I would look into it really, but anyway, so the bottom line is it's trading at 10 times earnings. So that's good. I can't imagine what these people are pissed off about. Let's see if we can find out. Class action lawsuit. Wait. Have commenced. Wow. It seems like they got certified as a class. Oh no, as various people. To learn more, the following class action lawsuit. Look at these guys. This is a class action lawsuit firm. That's all they do. All right, Newell. Newell allegedly made false misleading statements, failed to disclose the company's retail channel is loaded with high levels of unsold products. The buildup of inventory in the channel is company-specific, not macroeconomic. As a result, the unsold inventory channel, Newell is exposed to heightened risk that would experience. Can you believe that they get sued for this and Elon Musk walks around free? That just drives me crazy. As a result of the unusually high, I mean, all they did is basically they may have said that they had a high level of unsold inventory, and to the extent that they had it, they said that the buildup of inventory in the channels was a macro reason, whatever they thought it was about, whatever they claimed it was about. So they're being sued now for making a false claim about why they had this buildup of inventory that eventually led to some losses that hurt the shareholders, obviously. So now they're being sued by people who took losses. So question number one, how extreme were these losses? All right. I'm not talking about the validity of it. I'm saying how extreme were these losses that everybody seems to be upset about. NWL. Because to understand whether a lawsuit matters or not, so we know they're getting $100 million of tariff annoyance. What is this? Come on. So weird. Something's wrong with these. Once again, let's start stock charts again. Apparently, I have to start these windows fresh. Stock charts. Stockcharts.com. There we go. I should be able to log in. Or maybe not. Gallery view, NWL. What is with this stuff? The site can't be reached. I think Disney blocks certain sites. I think that's what it is. Maybe they think it's porn. I don't know. Nothing. Nope. The site can't be reached. How about I take out that S? That help? Oh my God, look, I understand the internet. Wow, I can't believe I actually know stuff. All right, so what were these losses? Oh yeah, they were. They went down a lot. Holy crap. So there's really massive exposure here. I mean, if they did lie about it, and these suits do get settled, you figure they'll settle them for some small portion. But the bottom line is people took massive losses here, and if they did in fact fail to disclose, and by the way, that's another thing. People get sued all the time, class action lawsuits for companies, but when you see many law firms with class action lawsuits, that's in the very least, it's going to run up their legal costs. So, and they do seem to be serial blamers. Here they're blaming the chilly spring and restructuring of big stores for unexpectedly weak sales in the latest quarter. Well, they make Sharpies and Elmer's glue. Anyway, I like staple companies like this. I just don't think there's any hurry to rush in and buy them. I think you want to let all this crap settle out and see where they are. If they come back over the 200-day moving average, that's probably a sign that things are clearing up. But this is not that sign. Going to 20 isn't that sign. And again, like I said, the PE is only 10 or 11 here, which frankly, for a boring consumer staples company, that's not a crazy PE. In the old days, 10 years ago, before the madness, a 15 would be high for a consumer staples company. These numbers that we pay these days, everybody looks at these companies, only 20 times earnings. 20 times earnings is 5%. If you're paying 20 times earnings, you're getting a 5% return on your money. And you've got the risk that you don't have in the bank. And that's what everyone has completely forgotten, this whole concept that if you can get 3% risk free, that's better than 5% with risk. And I've shown people this on compound interest charts over and over and over again. Steady compounded returns will beat almost anything over the long run. The problem's been that the banks have been paying 1%, and it wasn't worth paying. 1% is not worth it. You're not even beating inflation. But when you're getting 3%, 4%, 5% on your money in the bank, then it's not that attractive to take risks in the market. And that's the way very rich people think. Very people, billions and millions of dollars, want to keep their bill. Think about it. If you have $10 billion, right? You don't need more money. You just need to keep the money you have. There's no need for more money. You cannot possibly dig into that enough to spend it. I think even the most extravagant Saudi princes have trouble spending $1 billion in a year. It's like Brewster's Millions. There's they did a remake with Richard Pryor. The original was really good. The thing is that the uncle gives him in Brewster's Millions, it was $100 million, something like that. He gives him $100 million and he has 3 months to spend it. And he has to have nothing left at the end. And the reason he does it is because the real inheritance is billions of dollars, but he wants to make sure he knows how difficult it is to live that kind of lifestyle and how ridiculous it is spending that kind of money. So he goes and he tries to spend the money, and you can't, to try to spend that kind of money and not end up with assets is virtually impossible because you're buying things, and you can't spend it all on nothing. And even when you think you're wasting your money, like he bought a stamp. He bought like $1 million stamp and mailed it, and used it for actual postage, and theoretically it's worthless when it was canceled. But you buy a chair, you buy a couch, you buy anything. It's how many things can you think of buying that are worthless? And a person with $1 billion, just even if you throw it away on the stupidest stocks, try to spend $1 million on 1,000 stupid stocks and see if you don't have nothing left at the end of the year. You will. You'll have a lot less. And by accident, you might actually make money. If you take all these dopey stocks. So people with $1 billion aren't scared of. They don't feel. It's not that they need more money. They know that. They know they've got incredible amounts of money. The trick is not to lose the money they have. And you talk about keeping up with inflation, but if I have $10 billion, it's not about keeping up with inflation because I'm not spending even at 2%. That's $200 million a year. So every day I get $1 million in interest at 2%. Now, you say, oh, well, inflation, you got to keep up with inflation. No, I don't. I just have to not spend $1 million every single day. And I will end up with more money in my bank at the end of the year than I started the year with. And that's all I care about. I don't want to have less money. I want to have more money. So, so there you go. I have to rein my spending. And that's exactly what they did with the Saudi princes. In fact, just locking them up in a hotel for a month stop them from spending billions and billions of dollars. It's like a bunch of children, you got all these dependents who have bad spending habits, and you got to rein them in sometimes. So where were we? Oh yeah, okay. So the point is that when you get these low return, when you get these high returns, or when you pay these high multiples, you're paying a ridiculous amount. But that's the problem is the average investor doesn't think like a billionaire. They don't say, why should I risk my $50,000 on 1,000 shares of Newell for crappy 5% return? Like, why would I do that when it could go, hey, why it could drop 50% on me? But that's what a billionaire understands that a regular person doesn't understand. The billionaire understands that there's nothing that's worth risking $500 million over. You don't take your $10 billion and let it become $5 billion. That's the only bad thing you can do. $10 billion means your family will never have to worry about money, your children, your great-grandchildren, however many times it takes you to divide $1 million a day at 2% into a number that would be upsetting to leave to your family, your extended family. Don't forget, we don't have inheritance tax anymore. You just get to leave the whole bundle to your family. You get to leave the whole 10 billion in a bow. And all your family has to do is not spend more than $1 million a day, and they'll be richer at the end of the year. Right? It's not brain surgery. So the people who have money understand that there's no point in risking the money they have because they know it was hard to get. Or usually it is hard to get. It's not hard to get when you inherit it. And that's going to be interesting, actually. When all some people start inheriting billions and billions of dollars, tax-free, it's easy money for them. These are kids who were born 30-year-old kids get billions and billions of dollars from their parents, never worked a day in their life, never had a real job, and they'll gamble it. I bet we'll start seeing some amazing bankruptcies in the future, or amazing wipeouts of fortunes. But point being here that these are great returns, and as the rates start going up, and the Fed starts raising rates back to like 4%, which is going to happen at the end of next year. And people will not accept this fact. Next year, 4% is going to be the normal rate, maybe even higher than 4%. Probably we're going to end up at 5% down the road. When you're getting 5% interest in the bank, now don't forget, on $10 billion, that's $500 million a year. It's $1.5 million a day that you have to spend. Otherwise, it gets added to the pile. Every day, you got to wake up and say, how can I spend another $1.5 million where it's going to end up being, I got to carry it all to the bank. I don't want to have to carry all that money to the bank. I just want to spend it. I'm in freaking Disney and I can't spend that much money. I would have to, let me see, I have this room. I have the other room with my kids. I'm spending a lot. So I would have to have, about 200 rooms I'd have to take in this hotel. I'd essentially have to buy this entire hotel. So it's got about 350 rooms. I'd have to pretty much buy all the rooms in this hotel and treat all those people to days at the park and feed all those people. And that would then I'd be okay. Then I'd be even for the day off my interest. So I don't know. It's hard to be a billionaire. Let me tell you. So you look at these people, you think it's easy, but you got to come up with ways to spend money that are really, really creative. That's why they have these weddings and they invite like 500 people to an island, and people are like, oh my goodness, what a ridiculous thing. They make that money every week. That's what they get in interest off their money. If they have a good year in the market, they got an extra couple of billion to spend. It's like you can't possibly spend that money. So you may as well be nice to people. And that's why the billionaires who aren't, that's why the billionaires who are cheap just drive me crazy. I'm like, how can you be such, how can you not be generous when you have that kind of cash? It's such a weird attitude. But going back to what I was talking about, the bottom line is that all these stupid stocks and then make boring returns and have boring businesses and have boring expansions. Why on earth would you pay them 20 times what they make? They're not going to double your money. You have just as much chance of losing. You have much more chance, frankly, of dropping 50% than you do of double it. And again, I'm not saying I don't like Newell, but I'm saying let this bullshit, because that's the thing. A boring consumer staple stock with overhang of lawsuits and whatever crap is going on with these people, that's not that attractive. Now, what was attractive is, what was it Doug liked? I promised him I would look and I forgot. Pizza. Papa John's, speaking of scandal stocks, here you go. So Papa John's is a little bit different. They're engaged in a big fight with their own CEO. There's going to be a proxy battle. They're all blaming back and forth and blah, blah, blah. There's no lawsuits yet, but it's kind of like Wynn, where it's this long, drawn-out battle with the board and the CEO, founder, and so on and so forth. And it says here, the growing rift of the founder cast doubts on the recovery and shares of blah, 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 and whatever. It's like, okay, who cares? What's the deal with the stock? And it just becomes a factor. So PZZA. In fact, we had this conversation last week, and I said when it falls back around 35, I would be more interested. Is that the right number, 35? Whatever it got to. Yeah, 35. So I said down around 35, 37, I'm going to be interested in looking at the thing. Last week, I was not interested. What is with this thing? It's so, oh. Is that what we decided it is? Because I don't want to sound like I know what I'm talking about, because it's waiting for a certificate that it's not picking up. No, just not working at all. All right, let's use the Yahoo chart. Maybe that'll work. So yeah, at 42, we were discussing it last week, and I said if it gets back below 40, maybe 37, 50, 35, I'll be a lot more interested, because I think that's accounts for the risk of all the bullshit that's going on in Papa John's. Oh, I really can't take this. I can't. Oh, look, now it's showing up. It's so slow. I don't like this. All right, while we're waiting, let's see if we can get to a new question. So anyway, so bottom line is I think they're a good buy. I already looked at it last week, so I'm pretty sure they're a good buy down around here. But let it settle down. Let them show us where the bottom is. We don't have to pretend we know where the bottom is. I think this is a fair value, but it could go below fair value, so there's no hurry. I don't have an emergency to own Papa John's pizza. It always here, this is. Okay, so PZZA. Okay, good. All right. PE 15, and never trust anything. You've got to do your own math. As you just saw with Newell, you can't trust it because it says so. So let's see what they're actually doing. 1.25 billion at this price. That's on 1.7 billion in sales and 100 million in profit. So that's actually a little better than they're saying. So from that, you're looking at a PE if it's 100, and they're at 1.25. The PE is more like 12. And meanwhile, so at 38, they're making $2 a share. That's not 12. That's 17. That's interesting. Now, there's a lot of things that account for that. Inaccuracies, there's buybacks, there's different interpretations of what a share count is, so on and so forth. Don't know, haven't analyzed it that carefully yet, but the bottom line is they're in a zone between 12 and 17, which is, again, this is why last week when they were in the 20s, I wasn't that excited, because I need to see something, the consumer staple stock like this, I want to see 15 or less. For PE, that's a 6% interest rate. That's where, compared to the 3% I can get for a T-bill, makes a little bit of sense. So if you double the returns, am I willing to take a risk? I guess I will. I mean, I'm willing to take some risk, not too much risk. But again, the risk we're going to take is we're going to sell puts and then see where it bottoms out. But I'm still, again, not now. Don't love them, but PZZA. So if we go out to 2020 and we assume that they're still alive, we can sell the 35 puts for $550, $540, whatever the last sale is. So even $5 doesn't matter. That nets us in for $30, which is another 20% below the price we're at now, 25% below where we're at now. That makes sense. And now, so for the hedge fund purposes, if I want to put $20,000 away, I go sell. And I put 40 of these, 50, or let's say 50, doesn't matter. So 50, 50 of these would obligate me to buy 5,000 shares at 30, and I'm going to sell it for 550. So it's actually 29.50. So that's about 100. So I'm obligating about $150,000 worth of stock. Now, as you'll see, margin-wise, it's nothing. So I'm going to send that. So margin-wise, $15,000. I'm collecting $27,500. I'm putting $15,000. It's ordinary margin. The hedge fund, the margin is basically zero because we have portfolio margin, and it's more than 20% below the current price. So it would really barely register on the margin set scale. And we have obviously millions and millions of dollars in margin. But still, it's all we're doing is promising to buy $150,000 worth of Papa John's at a net price of $29.50. In fact, it even says that, break even, $29.50. So we're promising to buy 5,000 shares at $29.50. It's $140,000 or whatever it works out to. And of course, it's not that, if they go bankrupt, yeah, we lose $140,000, but the chance of them going bankrupt is pretty slim. And if we pick 7 companies like that, we're going to collect $140,000. We're going to collect $160,000, and the chance of more than one of the 7 going bankrupt is really slim. So in other words, if you have a 1 in 10 chance of going bankrupt, and I buy 10 companies and one goes bankrupt, I make $27,000 on the other 10. It's $270,000 compared to the one that goes bankrupt and costs me $140,000. I would still net $140,000 on practically no margin. So of course you do things like this with options. Of course that's a trade I want to make. And the only reason I'm not making it right this second is because I think they might go lower. If they don't go lower, we'll make the trade. But the only reason they're going to stop going lower is because things stabilize. If things stabilize, it becomes a less risky trade, and then I'm more inclined to take it. So even if I only get 450 instead of 550, at least I know they stabilize and there's no more hidden surprises coming. Once they figure out this thing with the CEO and they decide who's staying and who's leaving and what's going on, so on and so forth, and then you get past the point at which the shareholders start suing everybody for all their losses, and which is funny because if you ever get involved in one of these suits, it's ridiculous. But the bottom line is there's so many law firms. If the law firms ever win one of these, they make a fortune, and it doesn't really cost them much if they lose. So they're always willing to roll the dice if they can find people to sue. But look at this crazy thing. It went from 63 down to 40. Went from 80 to 40, really. So this thing also lost half its value. But unlike Rubbermaid, this is only a $2 billion stock. So the amount of money the lawyers say, okay, look at Papa John. See, this is also part of your arbitrage process. I have to say, well, okay, I'm a lawyer, and putting on my lawyer hat, I have to say, so the loss for the investors was $1.2 billion. If I sue Papa John's for $1.2 billion, I'm going to end up in court at best with half of that, $600 million. But I'm not going to be able to sue on behalf of all the investors. I'm going to create a class, and even if I get certified as a class, I'm going to end up maybe getting 10% of the investors, 20% of the investors. So my upside, if it's a $60 million win, my upside is only $12 million. And of course, I have to give some of that to my freaking clients. So I'm playing this whole game for $4 million, and it's still going to cost me about $1 million to push this lawsuit through. So I'm going to gamble $1 million to get $4 million back. That doesn't make sense compared to doing the same thing with Newell, where you can get $40 million back because it's a much bigger company with a much bigger lawsuit and much bigger losses. It's the same effort, it's the same judge, it's the same jury, it's the same research that you have to do, it's the same contacting people you have to do. The difference is just whether it's a big enough company to bother with. So you're less likely to see a suit go through here. And if there is a suit, once the law firm is in for $1 million, they're much more likely to settle because they got $1 million hanging on it. And if anything goes wrong in that lawsuit, and things always go wrong in a lawsuit, if anything goes wrong in the lawsuit that's against the lawyers trying to collect against Papa John's, then Papa John's lawyers are going to say, okay, I tell you what, we'll give you $10 million and not 100, not 200, not nothing. We'll give you $10 million. We'll pay your legal fees, which is what the lawyers want to hear, and you'll split with the clients the rest of the money. That's a win for the law firm. That's all they ever cared about. They don't give a shit about the clients. They want a big lawsuit where they get some cash, and if they think they've got a chance, if they think they've got a better than 50-50 chance of doubling their money, they'll take the chance because otherwise they got nothing else to do anyway. Otherwise they got a big office full of guys who aren't very busy. These are not your top-notch law firms. You know, not like top-notch New York and LA law firms are sitting there saying, "Gosh, are there any class action suits we can get in today?" These are schlock firms mostly. So, I mean, they tend to specialize. Some of them are good. They specialize in this kind of suit, but I mean, they're not, in demand by real companies for their services. So that's an overhang, but in the case of Papa John's, it's a more manageable overhang that doesn't worry me as much as the overhang of Newell, because Newell is a serious issue. It's a big company facing a big lawsuit that could end up with $1 billion plus settlement, which ends up being a whole year of their income. And that's another reason to knock them down below 15. So when they're trading at 20, it's not that exciting. All right. I don't remember what the topic was originally, but now let's see where we are. Jared says, hi, the August DXD 31's okay or roll? Well, August is soon, right? It's next Friday. It expires. Did we buy just the 31s? I mean, I'm not sure what that's from. But DXD obviously would not be doing well because the Dow is up. Not those futures. That chart. DXD. Oh, right on the money. Well, I would say, frankly, probably roll them. I mean, if you look at them now, that's not good. Were they naked? I don't think I would have done a naked. I wouldn't have done a covered one. The August 31s are 30 cents. That's terrible. And if you roll them, though, obviously, you can buy another month and move to September. And the September 31s, I would certainly pay the money to do the roll because you're rolling while it's cheap. I think I'd roll to the 30s because you're getting $1. So let's say those were 30 cents or something like that. So I'd pay $1.10 to roll to the 30s because then you're 90 cents in the money. So you're paying $1, but you're buying $1 in position plus the time instead of just paying money. Instead of paying 50 cents for nothing, right? To be in the 31s, you're still not in the money, and you paid 50 cents more that's going to decay. So I'd rather move to something that's in the money. I think I would wait because I do think we're going to have a bit of a sell-off at some point, but I always think that, so I guess maybe not. But that would be the roll. I would move the August 31s of DXD. I would move to the September 30s and spend $1 and see what happens. Dave says, with the trade war in China, how do you think LB will be affected? I don't think they sell a lot of Victoria's Secret in China. I don't actually know. I've never thought about their breakout in China. I mean, I'm sure they do sell it. Let's see. So you got to know how to answer these questions or research them. So Limited Brands, LB, international sales. So I'm going to make the question box small again. Comparable store sales, sales updates, March sales, global sales. That's a global newswire. It's not global sales. Revenue growth, blah, blah, blah. Forbes Global 2000 list. Nothing good there. So hopefully we can find a pie chart or something. LB Brands by franchise. No. Actually, that's interesting, though. 62% is Victoria's Secret, 31% Bed & Bath & Body Works. International stores. Well, there you go. That settles that. Oh, no, international stores is a brand. It's not stores that are international. Damn it. All right. Bed Bath & Body. You know, and when you're looking at these things, by the way, you might not find exactly what you need, but you'll get an idea. So let's say, what do I hear? So I learned Bed Bath & Body is 1/3 of their sales. Now I see the Bed Bath & Body is 1.2 billion in sales. 1.7 billion in sales. That was 2016. So figure their total sales are probably about $6 billion. All right. So now I have a fact that I know is like, okay, so now I'm looking at $6 billion in sales. I'm still looking to see if I can see anything that breaks out China or something like that. Comp stores, Victoria's Secret Bed & Bath, international segment. Yeah, that's it. Okay. I mean, that's whatever. Okay, so Victoria's Secret and Bed Bath & Body, international segment, trailing 12 months out of $6 billion in sales, $350 million total. That includes Bed Bath & Body, and that includes the entire planet. So it's not enough to be significant. So there's your answer. It's not important. It's something. It's not nothing, but it's not enough to say. Oh, it's not enough where you're going to say, oh my God, that's going to screw the company over. Now, of course, if their stuff is made in China, that's a different issue. Then the stuff could be made in China, be subject to tariffs when it comes back in, and then you've got some issues there. And that's just going to make them more expensive. But that's going to happen to so much stuff in America. I mean, it's going to be insane how many things are going to be hit with that kind of thing. Now, where does Victoria's Secret ship from? Make their clothes. If people ask that often enough, where it pops up in Google. Textiles, India, Sri Lanka, ha 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 ha. Child labor, excellent, cheap. We got good child labor in Sri Lanka. Victoria's Secret slave labor, Sri Lanka, excellent. Bangladesh. Child labor in the fair trade products here and now. Okay, great. This is good. No Chinese, just children. You can get children in any country. You don't need Chinese people. Victoria's Secret, made clothes, factories, 211, Gap, blah, blah, blah. Okay, so not much evidence of anything going on in China. So I think they're good. All right, so we can always make more children and get clothes made anywhere pretty much with that. Let's see. Three says, I see a lot of questions in our chat about volatility. Not too long ago, you suggested the iVolatility is a good site to keep an eye on. If you have a bandwidth today, please can you teach us how to read and take advantage of iVolatility.com, Newsjay, blah, blah, blah. Hoping we can find an angle to regulate. Oh, I don't like volatility plays. I really don't. Okay, if volatility is low, you can bet it's probably going to go higher at some point, but it's not. I want to see if I can get this thing up. See. And I don't frankly remember suggesting this actually. That wasn't me. That was somebody else who was talking about this site because I don't play these things. There's, this is what you call technical option trading, which means that you're betting against the volatility and the higher volatility and so on and so forth. I don't play like that. I mean, it's not a computer program to me. I'm a fundamental trader. So I trade when a stock is too high. I look to see if the options are high, and if I think they're unrealistically high, I'll play them, and I'll sell them. I won't buy them. So that's not what I like to look at. It's not the way I play these options. Please chart style. It gives it a full candles. You have lines. What? Oh, the chart styles. All right. Well, I'm not sure which one that was. I guess that was this thing. Wow, you are really picky, aren't you? You want candles instead of lines. Well, these charts have, oh, I see this chart. No, that chart's got candles. So it wasn't that chart you were talking about. I don't know what chart you were talking about. Those are lines. Those are candles too. They might look like lines, but they're candles. They just form a line over time. Still nothing interesting going on in the market. Can you use butterfly portfolio retirement portfolio for an IRA? Well, it depends on the IRA's rules, because technically you're selling naked short calls and naked short puts. So if they don't allow that, you won't be able to play it. One way to play that, though, is to take the positive side of the trade. So in other words, take a bull call spread in your retirement portfolio, because that's the thing, don't forget that you're paying off, right? The risk is being taken. So, well, there's a risk anywhere, but in your retirement account, let's say you take a bull call spread and you pay $7,500 for a $15,000 spread, right? That's just a straight up play. Then you're paying it off, the $15,000, you're paying it off by then using you're selling short puts and short calls against it. You don't have to sell them in your IRA. You can sell it in the regular account. And that way, what you're going to do is you're going to take the gains or losses in your regular account, but meanwhile, your retirement account has a $15,000 spread, or a $7,500 spread that's going to double. So if all goes well, you'll double up in your retirement account and have the extra cash in your spending accounts. Always think about that in the IRA. There's a lot of things you can't do in an IRA, but sometimes just have another trading account that's not in the IRA. And in fact, you try to make it so that you take your losses in the short-term account where you can take it off your tax bill, and then you put the profits into the IRA. Just try to set up your portfolio that way. Newell warned about $100 million earnings hit from tariffs. Yeah, right. Okay, so that. Tom says, do you think oil will bounce off 66.50? Oh, is that where it is? That might be interesting. Finally found something interesting. Oh, it did. Good call. Yes, I think it will. I think that's a great play. Yeah, it's a good play because it fell $3, which is 5%, and there's a 5% rule that tells you it's going to bounce off the 5% off a 5% drop. So when it starts at 69.50 and it falls to 66.50, or well, whatever. In fact, here, 66 point what? 66.5, thank you, times 1.05 is 69.82. So there you go. So if we find it fall from there, you go, see 69.82. So basically 69.85 down to 66.50 is exactly a 5% move. And it is a move of minus 66.5. It's a $6 drop exactly. And then we multiply that by 0.2. Wow. 6 times, well, we know what that is. It's $1.20 times 0.2 is $1.20. So there's your bounce. That's a weak bounce. It's $1.20. 20% of the drop is your bounce. So that means 66.50, and that's going to be 67. What? Yeah, 66.50, 67.50, 67.70. That's your weak. Wow, that seems high. Did I do something wrong there? Because it wasn't a $6 drop. That's what the problem is. It's a $3 drop. Sorry. It's a $3 drop anyway. And so what the hell was that number? I did something wrong. So it's a $3 drop. Therefore, you're going to have a bounce of 20% of that is 60 cents. So 67.10 is a weak bounce. And then 67.70 is going to be your strong bounce line. So that's what you want to look for on a recovery off of 66.50. And if you don't make 67.10, which we're going to find out shortly if it's going to make it or not, and what are we at 2:30? Yeah, we're heading into the IMAX close, so it's getting a little last leg rally. If it fails to make 67.10 or gets rejected at 67.10, there's a pretty good chance that it's actually going to head lower. But it's a little early in the contract period for me to be making any big bets on the oil. But that's how the 5% rule works. It lets us know like where we should be looking for the lines. And what should this be? Let's take a look at gasoline is RB. Now gasoline's, okay, see this one I would play though. This is into the weekend. I don't mind playing gasoline here. So let's buy one. So at basically about 202. And let's see how that goes. So I would have loved to record it off the $2 line, but we missed that by a mile. I mean, $2 was an obvious bounce. And again, from 210 to 2 is a 10-cent fall. So 20 cents is a weak bounce. We're past the week. I'm sorry, 2 cents is a weak bounce. We're past the weak bounce. So probably heading up, unless it stops here, we're probably going to move up. Once we get a little bit past this, we're going to be pretty sure we're going to go to 204. And that's going to be a good amount of money to make on gasoline. So I like that. But you also expect to see resistance at the bounce line. Hang on. Someone's at my door. Hey. Absolutely. You want something? Come on. Yeah. Let's see. I need finish that off. And you know what? I can actually put this on one of these plates. Oh. Doing toasting easy for you.
You just put the
Keep this here. Okay, all yours. Oh, I'm sorry. Yeah, I forgot about that. You got it? All right. Sorry about that, guys. They wanted their dishes back from room service. All right. So what were we talking about? Oil, right? Yes, oil, gasoline. So I don't mind shorting gas. Okay, I don't mind going long. Oh, 202 failed. So I don't mind going long on gasoline because we got all day tomorrow and all day on Friday for this thing to move higher. And I do think it'll go higher into the weekend. So if it goes back down to 2, I'm more inclined to add some longs. But I don't want to go too heavy because this might just be a weak bounce and it's going to fail. So that's a trade I like there. Jared says the DSD August 30. Okay, yes, I would certainly roll the August to the September 30s, and then wait for these guys to expire, and then hopefully sell some September whatevers to lower the price again. Burden says, oh, I'm sorry, guys, if that wasn't clear. I'm responding to what he wrote, and I don't think you can read what he wrote. He said we were talking about the DXD August 31-33 bull call spread. So leave the 33 August short calls, roll the 31 calls to the September 30s that we looked at before. That was what we said it was going to cost about $1. And then when the August 33s expire next week, then you want to start looking at maybe selling some September somethings for close to $1 to cover the position. Okay, if you want to make it a free roll. And or depending on how the Dow's doing at the time. So we'll see what happens. Meanwhile, these guys did run into trouble up at 67. And again, now you say, well, they came up from 67.30 to 67. That's 70 cents. So about a penny and a half would be a weak pullback, which would be 85. And then down to 70 would be a strong pullback. And if they fail 70, then you would say they're in big trouble. So 70 is the line we're going to watch now from that run. So you can always just take any run that you're looking at and figure out the retraces, and then you can see whether or not it's having a normal retrace or if there's something actually wrong and it's breaking down. That's what the 5% rule is good for. And it's just based on telling you where the computer programs are likely to kick in, the buy program. There's always some buy programs and some sell programs. You want to see which ones are winning. So at a certain point, profit taking kicks in. How do you think LB will do to the end of the year? I think they'll reach 40. LB, yeah, I think so. I think they're ridiculously underpriced. Again, nice, steady consumer staple, heavy-duty brand name, trading at a ridiculously low PE. There's nothing wrong with their business model. They just, there's the vagaries of retail. And I don't really care if they get to 40 this year, next year, the year after that. We just keep selling options against them. We keep buying spreads, and eventually it goes in the money and we cash out. That's all there is to it. There's no pressure. It's just you pick an undervalued thing and stick with it. Because, when your returns are 300, 400, 500% on these spreads, you don't need to make all the money this year. And Burns says, IMAX earnings next week, low in the channel. What are my thoughts on IMAX? I always buy IMAX when they're low in the channel. Always. It's a serial underperformer, often in the channel. I'm so tempted to just buy more now, but I'm going to wait. I got to have some discipline. So I'm going to wait and see what happens. Don't forget the IMAX closes at 2:30, so this is the last gasp into the close. And it's not looking very strong. Let me see what happened with Helios first. Wait, no, let's do IMAX first so I can remember. IMAX. And IMAX is a slave to whatever movies come out and whatever happens in the movie. So it's a weird thing. Because they do a lot of business in China, people are worried they're going to get caught up in the China nonsense too. The Europe rate is to be released in IMAX across China. IMAX's blockbuster year continues, which is interesting. Since IMAX they missed on revenues, but they hit the earnings, which is like, what do you want these people to do? They don't control the earnings. It's not their fault that Solo didn't do well. The problem with IMAX, and it's not a problem with IMAX, it's a problem with the smoothness of earnings of IMAX, is that the Solo picture, because people thought it was going to be a blockbuster, not IMAX. IMAX had no opinion on the matter. Because the movie theaters thought Solo was going to be a blockbuster movie, they slated the IMAX theaters to have it for 2 or 3 weeks instead of like 1 big week or 2, probably 3 weeks instead of 2 weeks. Like usually in movies 2 weeks if they think it doesn't suck. So they slated on all the IMAX screens, not some. So in other words, IMAX was forced. In their case, for IMAX, they had all their eggs in that basket. The movie theaters have all their eggs in one basket. They got lots of theaters, and IMAX is one of them. But when they all make the same decision and they all feature the same movie in IMAX, if that movie then flops, then there's no profit sharing for IMAX, and then that movie becomes a flop for IMAX. It's not their fault that Solo wasn't a good movie. It's no reflection on IMAX as a company. It's no reflection on their forward ability to fill theaters or to have screens. It means nothing. It only means that quarter they didn't have good revenues. It's like having a lemonade stand, okay, and like there's no, and it's cold. Nobody wants lemonade. Like it's not your fault. It doesn't mean lemonade is a bad investment. It doesn't mean lemonade stands are a bad investment. It doesn't mean you did a bad job marketing your lemonade. It just means it wasn't cold. It means it wasn't hot. Nobody felt like getting cold lemonade. That's all. I love businesses like this because people are completely irrational when they play it. This is a fantastic company. What do we got here? We got blah, 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 blah. Okay, so 98 million in revenues was up 12% from last year, but they thought it was going to be $99.3 million. Oh my God, sell the stock. It didn't make 13 or 14% revenue, gains. It's idiotic. Equipment sales were down. But that's, again, random. It depends on when they sign a contract and how many theaters are getting built this quarter and so on and so forth. Service revenues were up 20. That's more important. Service revenues up. That means there's more systems in service and they're running around doing more service contracts that are ongoing, consistent revenues versus the up and down revenues of equipment sales, which again, up and down 15 million, down 28% means it was down $4 or $5 million from last year. Revenues up 55 million, 23%. Those were up 10 million. So that net's up 5. If they didn't break those categories down, they'd be up 5 net. Rentals were 29. That's up 30%. Rental equipment's up 30%. Financing up 28% up. It's a freaking stellar report. What happened? Where'd it go? Oh, see, this is where I need that mouse with the roly ball because I can't have my drink in my hand and talk. And they both fingers for the keyboards. IMAX business revenue 60. The revenues were up 28%. I could cry. I can't believe the stock went down. DMR, there's nothing bad here. Global box office films 27.4%. Oh my goodness. Joint revenue sharing increased 31%. Theater business, there you go, that's right, because it's down 5.7%. Within the segment, maintenance was up. Other theater revenue up. However, IMAX systems revenue plunged 16.8%. New business revenue surged 137%. Oh, God. Other revenues, however, plunged. So this rose 137%. This plunged 44%. It's the same money. IMAX installed 31 systems, 30 for new locations there. IMAX systems 1410. And like I said, see, they don't have all their eggs in one basket. 1,300 out of 1,400 are in multiplexes. The other 100 are things like when you go to the planetarium or something like that, if they have an IMAX. Those are the ones that have just an IMAX. 637 five theaters backlog as of June compared to. So IMAX is more popular now than it was last year. 20% more people want IMAX theaters this year than did last year. Gross margins, network growth, blah, 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 blah. IMAX has cash. During the quarter, IMAX purchased their shares back. I wish they wouldn't do that. They're installing more crap, blah, 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 blah. Okay, so anyway, so anybody selling this stock is basically an idiot. That's one thing. So in the short story, people are idiots. All right. Weekly. So they're really in the same channel all the time. This is their normal low channel for these guys. You know, when they're down around 25, whatever, that's when I start buying. We always buy them down here. And up around here as we look to cover or sell or whatever, because that's where they go. They're going to be somewhere between here. They've been persistently low for a while, but that just makes them a great bargain. We already have IMAX. Let's see what we have. In the long-term portfolio, wow, 35%. Jesus Christ. IMAX is what was that LB? Oh, see, we covered our LBs. Isn't that smart? IMAX. Control F, IMAX. There you are. Oh, we have the $18 calls. Holy cow. Okay, so we bought them on 2.8 when the IMAX was way. Oh, no, actually it was over here. I thought it was way down there. We were on 2.8. That's over here. So we bought IMAX over here at that in the 30s. I don't know how that worked out. And apparently we have the $18 calls. We paid well, it doesn't matter. However it happened, we paid $3.80 for the $18 calls, and they're now $4.75, so we're up a bit there. And we sold a partial cover of the $23 calls, and those things are ahead too. So these gain money, and these gain money too for us. So we're winning on both sides right now because we're in the middle. And we only targeted 23. We were very conservative, so we're right on the money. We didn't sell any short puts or do anything else with them, though. In the options opportunity portfolio, which cannot get it in gear, 12. Oh, you know, it's 12% because of stupid VRXs, though, right? Where are they? Yeah, we're still zero on the VRX. That's got to get fixed. That's ripping us off for a lot of money. IMAX. Here we are. Same play, really. Oh, here we're in the 15-20, even more conservative spread. The 15-20 spread with the short 19 puts. That'll finish up 100% of the money. And 100% of the money for this one is going to be $10,000. So currently it's at 9 and about 8,500. So we got about 1,500 left to gain. So we'll gain 20% more in the next 44 days. So there's no reason to take it off the table. In fact, you know what's funny? Because we talk about this stuff, we show this stuff all the time. Here's a trade on IMAX that's 100% in the money. Doesn't seem risky at all. So 15-20 bull call spread for September and the short 19 puts. It's currently net $8,500, and it's going to pay $10,000. So it'll be 50. You'll gain $1,500, which is almost a 20% gain in September. It's August, so it's about next month at expiration. You will make 20%, and we don't even consider that a trade at Phil Stockworld. That's not even a trade. That's like, yeah, so what? 20% in a month. So I guess technically that's great for a new trade. We already had earnings. There's no surprises. I mean, that would be, it's literally most people, if they found a trade like that, that would be the trade they talked about for the next 2 years. That's after we're done with that trade. That's over. We closed it. Well, like I said, we're done with that trade. Yeah. But I'm saying even now you can make it. You can still make some money. It's just not enough money to interest us. So good. I'm glad we took it off the table because it went down since then, right? But that means we're just looking for a new opportunity. Yeah, we closed it. It was up around here. Now it went back down. Had I realized that 2 days ago when it was 21, I would have jumped in again. I love this stock. Okay, and if you want to look at a new trade on IMAX, I will see what they're up to now. I think the problem with IMAX that annoys me is they don't have long-term plays. If they have real long-term plays, I love it. What the hell is that? I misspelled IMAX. All right. Oh, they do go out to 2020. What am I talking about? That's weird. I didn't think they did. Oh, wait, you say earnings next week. They didn't have earnings already? I thought they had earnings already. Oh, thank you. Okay. He says earnings next week. They go, oh, no, not IMAX. LB has earnings next week. Yeah. So IMAX says they had their earnings. We know there's no surprises here. Yet, in 2020, we can still sell the $20 puts for $2. So let's say we sell 10 of those. You're risking owning 1,000 shares of IMAX at $20. That's your maximum risk. And that's for a company I would love to own for $20. It's $22.70 right now. So I consider that free money. So let's say you get $215 for it. That's $2,150. And now I can take that money and buy what? It's really a question of saying, like, where's the best bang for the buck? So if I get the 20s, all right, if I get the 22s, I want to be in the money or at the money. So if I get the 22s, that's $470. If I pay $580, well, that's all right, it's not $470. Let's say it's $460. But then I only pay $1.20 more to be in the 20s. I'll pay $1.20 to be $2 more in the money, sure. Then I look down to the next one. I say, well, these are 7. So that's $5.80, another $1.20 to be $2 more in the money. Again, I'm going to pay that money. I'll pay another $1.20 to be that much in the money. Now I look at the 15s. So 15s are $9.20. That's $1.40 now, but it's $3 more in the money. I'm certainly going to pay that. So now I'm into the 15s. I'm like, wow, do I really want to own the 15s? So, and these are still cheap, but the 13s are still cheap. The 15s are optimal, it seems. So the 15s are a really good price. If I'm paying $9.50 and 30 cents for the 15s. That's $24.30. So I'm only paying not even a $2 premium on the thing. So I know I want to sell at least $2 to cover the premium that I'm paying, but I'd rather have a cushion, so I can sell the $25 calls. Those are $3.10 or $3.20. So let's say $3.20. So that's $9.30 minus $3.20 is $6.10 on a $10 spread. So now I got about a $4 upside, but I sold half. If I sell half of those, that'll be $1 off each one. So I now have I have a $5 upside. So I'm netting 5. I don't think I'll do that. I think if I was doing this, I think I would do only 15 of these for $6. What do we say? $6? So 15 of those, 15 of the spreads for $6 is $9,000 minus 10 of these for $2,000 means I'm spending $7,000 on the spread. That is going to pay me $15,000. There's an $8,000 upside on the trade. And then when IMAX is high in the channel, I can sell some short-term calls for an additional income. But meanwhile, it's 100% return if IMAX hits 25 and it's 22.70 now. And anything over 20 makes me money. More than 20 because we have a $15 call. So really, anything over like $17.50 is going to make us money. So again, really good trade, really nice return, not a lot of risk, good stock. That's the way you trade it. You don't have to take any chances. And you certainly don't have to pay any premiums. So that's the way I like to lay out a spread like that. It's very simple. You just have to think about what you really want, how much you trust the stock, what you're willing to pay for the stock. All that comes into factors that you have to consider when you're doing these things. All right. So sorry the futures are not interesting today, but they're just not. Gasoline's coming back a bit, so we're going to hold. Looks like we'll hold that. The IMAX closed, so that's where we finished with the excitement. But tomorrow being Thursday and then Friday, plus if push comes to shove, even if I take a hit right now, we're coming into another couple of weeks when we hit the holiday weekend, so I can roll this thing in. Gasoline is going to be more than $2 into the holiday weekend. So it's a no-brainer for me to be long down here. I mean, all that's going to happen is I would double down to 2, and I have 2 long contracts, and then I would wait and see if we get any traction into expirations. If we don't get any traction into expiration, I would just roll to the next contract and then wait for the holiday weekend, probably double down again to the next contract, because I'm very, very confident that we'll be at 205 by the end of the month. I don't care what the inventories say. Nobody else cares either. What they're going to do is they're going to jack it up. And then we can go back to the gasoline chart and say, why am I so confident? Well, look what happened the 4th of July. This won't show you the 4th of July. Anyway, so the 4th of July, we were going down, but then all of a sudden into the holiday. Oh, that's June, sorry. We were going down like crazy into June. Then all of a sudden, in this part of June, later part, not the beginning of the month, so we could come back to $2. But all of a sudden, off that $2 line, boom, 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 all the way up to like 217 into, July 4th is here. And even after July 4th, they kept it up for a while. And then it collapsed back because it's all bullshit. I don't care if it's bullshit. I make a lot of money on that bullshit. You make, is it 320, 300, 420, 320 or 420? Brain. Freaking stupid senility. That's 18. No, not 18. Not that. Oh, DB, that's it. There you go. 420. $420 per penny is what gasoline contracts pay you. So for $420 a penny times, I expect to see at least 5 and maybe 10 pennies. I think that's a great trade. I want to be in that trade. I'm excited about being in that trade. Why would I not want to be in this trade? It's $4,000 on one contract. So if we hit 212, which I see no reason we wouldn't, That's four. It's right back to where we started. Pretty much back to where we were yesterday. That's going to be $4,000. So that's why I love these things. I mean, what's my expectation for gasoline getting cheaper into the holiday weekend? Not really high. It's not a high probability I'm going to lose money. So I want to make a high probability, high leverage bet. That makes sense. So that's my bet of the day. And it may be painful. Like I said, I expect to hit $2, at which point I'll double down and average 201, and I'll have a $800 loss at that point. And if it goes below, if it goes to 198, I'm not going to get out. I'm going to stick with it, and I'm going to see what happens. But that can get pretty painful. If you're in at 201, it goes to 198, you're down $2,500 on 2 contracts. So it's not going to faint to heart. But on the other hand, if it then goes to 211, I'm up $8,000. So I'm risking $2,500 loss to make $8,000 when I think there's a very, very, very strong probability I'm going to make my $8,000, possibly much more. And that's the other thing about the futures. It's the probability of me losing more than a few $1,000s versus the possibility of me making much more than $10,000. They weigh out each other. And it's just a question of putting yourself in these positive risk-reward bets on a regular basis. And that's what works. I mean, you can take the greatest odds in the world. You know, I mean, there are upsets all the time in sports, right? You can take the greatest odds in the world, and you can take the right side of the odds or whatever, and you can be on the right side of the bet, and you can still lose. But that doesn't mean that the statistics are invalid. It doesn't mean that your theory of betting is invalid. It only means that something weird happened. And again, this is going back to being the house. The only way statistics work is if you play them over a long period of time. You know, in other words, if you flip a coin, we had a nice table of that. We got to talk about that. That's important. It's probably on Monday, if I remember correctly. Or at least I reprinted it. I think I reprinted it yesterday, though. Let's see. It was a good article. I played Fortnite and figured out the universe. I like that. I do play Fortnite. My kids got me into it. It's fun. I play with my kids, though, which makes it much more fun. Let's see. They have classes. Parents. I showed that to my kids. My kids laughed their asses off, and then they said, "Can we get that?" They actually have classes where you hire tutors to teach your kids how to play Fortnite better. Man, that's freaking insane. The world's mad. This is what. There's another thing. See, Disney, right? Christopher Robin is banned in China. Christopher Robin's an adult, like from the Winnie the Pooh story. There's a new movie called Christopher Robin where he's like an adult, but then the Pooh characters come to find him in London or something. I don't know. I haven't seen it, but I'm sure I'll see it on the boat next week. I'll be on the Disney cruise. Anyhow, so because not Disney's fault, because people use Winnie the Pooh to make fun of Chairman Xi of China. And frankly, if you look at this picture, look at their faces, you can kind of see why. I mean, they got the same everything. So, and Avi's great. So they use this to make fun of him in China, or not in China, obviously, they'd be executed, but around China, he's made fun of with Winnie the Pooh, and he's compared to Winnie the Pooh on a regular basis. So he's like, no freaking way is Disney going to play some movie about Winnie the Pooh in China. That's not happening. And so it's banned. They just basically banned the movie because the head of China doesn't want to be made fun of, or doesn't like the fact that he's been made fun of compared to Winnie the Pooh. There's no fault of Disney's at all. So meanwhile, that then obviously it's a ding on their earnings, though. I mean, they expected this movie to be played in China. They expect the Winnie the Pooh character to be featured in their Chinese theme park. I bet they can't even do that. I bet they wouldn't dare create a Winnie the Pooh character around. So it's just too funny. I mean, it's just so weird what happens in the world. This is what happens when you let like autocrats run your country, though. It's not good. You suddenly find things get taken away from you for no reason. As we're seeing in America. This was not the right place. So I have to go to Monday. So really good chart. So I definitely want to show it to you. Page down. See all the things you learn when you're in Phil Stock world? We talk about all kinds of stuff. You learn why President Z doesn't like Winnie the Pooh. All right, come on. Somewhere I talked about this chart. Here it is. So what kills you in trading is obviously consecutive losses. What kills you in gambling is consecutive losses as well. Okay, consecutive losses means you lose, you lose, you lose. You don't have any more money. You walk away from the table. That's it. You can't play anymore. Even though right after that can come up 5 in your favor, it's too late. You got wiped out. The biggest house advantage isn't the odds. It's that the house has an infinite amount of money and you don't. So in the course of the odds, sometimes, not often, in fact, in 600 events, 2 times there was 7 or 8 profits in a row. 2 times in 600 tries. In 600 tries, only once was there a loss of 7 or 8 times in a row. So you would say, holy crap, the odds of 7 or 8 in a row is incredible. It's like craps, right? The guy rolls a number 7 or 8 times in a row. So the odds of that happening are tremendous. And you would make a fortune on these 2 times, right? But look at this. This one time, though, that goes 7 or 8 against you. The difference is you as a player are likely to get wiped out or even just get pissed off and walk away from a table if you lose 7 or 8 times in a row. What does a house do when they lose 7 or 8 times in a row? They keep playing. So you'll never see this run because you'll be gone. Unless you're very lucky and catch it, you will be gone, but they'll still be playing, and they will keep playing until somebody loses this. Even these guys who won will keep playing because you don't walk away from the table when you don't go to a craps table and make a ton of money and go, oh, I'm good, I'm done, bye. You think, roll those dice, let's go, baby. I'm gonna get a house. It's whatever. It's hard to stop when you're ahead. And that's when we talk about being in the house. And that's our strategy. That's what we tell you. You've got to keep playing because these statistics can run for you or they can run against you. That's 5 or 6 times in a row, 6 times, 3 and 4 times in a row, 27 times, 3 to 4 times in a row, something happens against you. 29 times on this side, 3 or 4 times. So basically that's realistic. So out of 600 times, 1 out of 20 series that you get involved in. So if you bet 20 times a month, the odds are that 3 or 4 of those times you're going to have a streak where 3, 4 times in a row you make bets and they go against you. And again, it's assuming 50-50, blah, blah, blah. But this is what we teach you. We're teaching you to be the house. And one of the things about being the house is you've got to keep playing. But you can't keep playing if you bet all your money and lose it. That means you have to manage your money. See how all these things tie together, the stuff we teach you. We teach you to manage your money. We teach you to scale in with small amounts. Because you know what? When you scale in with a small amount and you win 7 times in a row, you win a lot of money. But when you scale in with a small amount and you lose 7 times in a row, you don't lose that much money and the one win can make up for it. But only if you survive to make the win. So you have to spread out your bets. You have to spread out your money. You have to manage your losses. You have to bet. And the key is not to play the 50-50 game. This is a 50-50 game. Don't play the 50-50 game. Play the 60-40 game. Play the 70-30 games. Play the games where you get paid more when you win than you lose when you lose. What kind of games do I like? I like to play when I win twice as much as I lose. When the odds are when it's not the odds may be 50-50, but I try to, my goal is I want to get the odds at least 60-40, and I want to win at least twice as much as I lose. Because you know what? If you win twice as much as you lose, and you win 6 times out of 10, you're going to make a lot of money. So let's say you win 2 every time you lose, and you make 6 out of 10, that's 12. Then when you lose on the 4 times you lose 1, that's 4. That means you're up 8, even though you only won 6 out of 10 times. And in fact, frankly, if you have a bad streak and you win twice as much as you lose on a trade, then if it goes against you 6 times, you lose 6. But if you win 4 times, you win 8. You're still ahead. If you lose 7 times out of 10 and you lose 1, that's losing $7 or 7 units. If you win 3 times out of 10 and win 2, you make 6. That means your net loss on 10 tries that went terribly against you, 70% against you, is a loss of 1. And you can do what? You can play the next series, even after a terrible, crushing defeat where everything you did didn't work out. You can still get back up and play. But that's because you manage your money and you take good risk-reward plays that have a higher statistical probability of working out. That's what it's all about. It's very random. You don't know when Elon Musk is going to tweet out something wacky. You don't know whether Han Solo is going to be a hit or not be a hit at the box office. You don't know when somebody's, you don't know when Ford puts out a car and has to recall it because something's jamming up. You don't know when things are going to happen. You don't know when Chipotle is going to poison somebody. You don't know when McDonald's is going to poison people with the salads they've had lately. And even weirder about McDonald's, you don't know that McDonald's, this is why Chipotle is going through the roof, by the way, because McDonald's had a salmonella or whatever the hell they had in their salads. I didn't pay attention. It was just silly because it's such a non-issue. But you know what's funny? Because it happened to McDonald's and it barely hurt them, it barely moved their stock. What happened is the people who own Chipotle say, hey, we are overthinking this stuff about the food poisoning. It happens. It even happens to McDonald's. And that's caused Chipotle to go flying higher because they're a lot less worried about the repercussions of food poisoning. And what is it with McDonald's? Here's the thing. And I said this about Chipotle when it first happened. If you're going to serve fresh food, people are going to get sick. Because fresh food, especially local fresh food, is made by 1,000 different farms that are stocking your thousands of stores. And you cannot possibly control the quality to the extent that nobody can get sick. People get sick all the time from food. It's just that in Chipotle, we worked it out once. I forgot what it was. I think the average was, I think the average was something like 1/3 of all Americans eat at Chipotle once a week, like something like that. Like, so in other words, if Joe's Crab Shack down the street makes you sick, 20 people in your town, 30 people in your town get sick, and nobody's ever going to mention it. But you know it happens all the time. How many times have you come back? How many times has somebody said, "Oh, that Chinese place, I got such stomach pains," whatever? Nobody cares. It's food. Food goes bad sometimes. Bad things happen in restaurants. Don't ever watch the Gordon Ramsay things. You see what kind of disgusting conditions some of these restaurants have. So, in fact, he even says sometimes, he's like, Gordon Ramsay, sometimes he looks in the refrigerator, he looks at the food, he's like, "You're going to kill somebody. I'm shutting this place down." He's like, "You are going to actually kill people with this food." And it's mortifying. I worked in restaurants a lot. When I was a kid, I used to work in restaurants all the time. And I've seen some pretty bad ones. I mean, it's really incredible what they do and how little they take care of food sometimes. But anyway, so the bottom line is, when you serve fresh food, it gets contaminated, it gets whatever, something goes bad, it gets a parasite, something, and people get sick. That's just life. That happens. And you try to control it as best you can, but you can't control everything. So Chipotle, because they serve basically fresh food on all their stuff, they increase by exponential amounts how the odds of somebody getting sick. And of course, since everybody in America practically eats there once a week, or not everybody, but 1/3 of the people that you know have eaten at Chipotle this week. So that's crazy when you have numbers like that, and more for McDonald's. So when McDonald's says, oh, you know what, let's start competing with these people, with these other restaurants and serve fresh salads. Uh-oh, fresh salad, McDonald's, even though they only use like 4 packers in the country, massive farms with incredible quality control, still they get a bad batch. It cannot be helped if you have fresh food, no matter who you are, no matter how good your quality control is. It cannot be helped. That's what fresh food is. But now that it's happened to McDonald's, it basically is changing the thing. In fact, that's the same thing with the self-driving cars. Now that when it happens to Uber, everybody freaks out and goes, oh, Uber, oh, self-driving cars, this and that. But you know what? When Google and Ford and GM kill somebody with their self-driving cars, people are going to say, oh, well, self-driving cars are going to kill some people. What can you do? So do real drivers. It changes the nature of the conversation, but then what it does is it makes all of it more acceptable. And that's where we are with Chipotle. Now people are getting to the point of view that we had when we were buying it like crazy when it went down here, because we said, this is stupid. This is what fast food is. This is what fresh food is. That's what happens, and people have to understand that. And whether they understand it or not, that's the truth, and it doesn't imperil the restaurant's future. It just makes them crack down a bit on quality control and hopefully do a bit better and have less incidents. But they won't have no incidents. They'll always have an incident. And that's what happened back here. They had another incident, and everybody freaked out. But then it went flying back up because you know what? People looked at McDonald's and said, it didn't hurt McDonald's. Why are we freaking out? And this is a major turning point for Chipotle, is people not freaking out about a food poisoning. It's a major turning point. It was very annoying to own the stock and just have to wait for the next incident to drive it back down. Although $500 is too expensive, but that's beside the point. There's a little bit much to pay for Chipotle. Anyway, all right, 3 o'clock. We're going to wrap it up. Hopefully I didn't miss any questions. Let's see. All right, good. All right, everybody's happy. We answered all the questions. And I am now going to go swimming. So you guys have a lovely day doing whatever it is you're doing, but I'm out of here. All right, take care, folks. No webinar next week because I will be on a boat, and that's just too much of a pain in the ass. But I'll be back the week after, right? Take care, folks. Have a good day.